I want you to take a look at the S&P 500 chart, and without knowing any dates, you're probably thinking, wow, this is a bullish looking chart that will make me money, right? Now, if you look at the chart, which is where we are now, and you see how everyone was happy with their money and now they're not. If you start investing in November or December of 2021, you have seen nothing but downtrends in the market. And it's very discouraging for many young investors because all they see right now are short-term performances. It really makes me sad when I read comments from some of you guys that you've stopped investing completely or you sold all of your positions inside your retirement and non-retirement accounts because you're trying to time the market. I still remember when people said they hated missing out on the quickest recovery of the stock market in the history of the stock market in 2020. And I knew a couple who sold all of their stocks, ETFs, and mutual funds in March 2020 and just sat on cash until March 2021. They didn't want to invest because they thought the lockdown would keep their stocks in the bear market for a long time. And they obviously know now that they were wrong. And according to a study done by Magnified Money, some 38% of investors sold stocks last year due to current events, and 40% of them wish they had kept their money invested. And the survey also showed that Gen Z investors were more likely to panic sell due to inexperience. And what are the current events that impacted their decisions to sell? Well, the most obvious one is inflation. The pandemic came in second, the economic policy came in third, the conflict in Europe came in fourth, and the Fed raising interest rates came in fifth. This is the chart from March 2020 until March 2021. The S&P 500 climbed from 2,100 points to almost 4,000 points in 2021. We can always go back and look at the historical chart and judge ourselves, right? What we can't do is obviously predict the future. And you're probably thinking that this is all common sense stuff, but you'd be surprised by what people actually do when they experience fear and uncertainty. And this is why you should get my absolutely free financial independence resources by visiting firesidechat.com/contact. I'm still doing the 30% off for every coaching plan until the end of the year with the coupon code FIRE30. You can schedule a free one-on-one 20-minute financial coaching session by visiting firesidechat.com/coaching. So what am I doing now and going forward? I'm sticking to my investment plan without timing the market, especially with my retirement accounts. My financial independence journey began in 2016, and I have been consistently saving and investing 65% of my gross income, and I'm looking to increase that going into 2023. And I'm not going to stop investing. I'm not going to cash out of any positions because the mutual funds, ETFs, and stocks I own are down 20, 30, 40, or 50% or more. I'm not timing the market like some people are doing by selling all of their TSP, and S funds and moving them into a G fund because they don't like to see their portfolio bleed. My TSP, 401k, IRA, Roth IRA, and HSA are completely automated with investments. And these accounts are the first bucket of my Fat Fire plan. And I always prioritize maximizing my retirement contributions and then my early retirement contributions because of time. And time is the ultimate weapon in the investment world. I'm 36 years old, so I'm not looking to touch any of my core retirement accounts for another 24 years. But I know how strong my dollars will grow for 24 years in these retirement accounts. Where do you think the S&P 500, NASDAQ, or Dow will be in 24 years? I'm not going to look at the past and say, I shouldn't have stopped investing in 2002, 2008, 2018, and 2020. Those bear market years were the years that stocks traded at the cheapest value at that time, right? What if you look at the bear market from a different way? What if I said, these stocks are trading at a Black Friday discount? Would you want to buy them now? And this is how I always react to the stock market. This is a little funny, but we were on the longest bull market run in the history of the stock market from 2009. And I've been investing in my retirement since 2004, right after the dot-com bubble burst, and that's when I turned 18 years old. In 2013, I almost filed for bankruptcy because I was $110,000 in debt, and I'm really glad that I didn't. Between 2014 and 2016, I worked my butt off to get those debts paid off. And 2016 was when I truly started maximizing my retirement contributions because I had just discovered the financial independence movement a year before. So the end of 2018 was when I first experienced the market correction when the Fed raised interest rates out of nowhere. And I continued to dollar cost average my retirement investments. 2019 had one of the most tremendous returns because my tech ETF had like over 30% return that year. Now, in March 2020, when the country initiated a shutdown, I remember telling my wife that we're going to see some pain in the stock market. I never said that we should sell out of any positions in the S&P 500. Not knowing how the year was going to turn out, we just continued to dollar cost average our retirement investments. By the end of 2020, we had over 20% or 30% returns in our portfolios because we continued to buy assets. Going into the end of 2021, that's when I realized inflation was not going to be transitory. And I talked about it in this very old video of mine if you need to fact check me. High inflation was clearly going to be a problem going into 2022. And I had already started to see some corrections in the market. What I didn't think was going to happen was the Russian invasion in February, which drove inflation way up, right? The hawkish Fed also didn't help the stock market at all. So if I'm being completely honest, 2022 was by far the worst year to buy the dip if you're looking at it from a short-term perspective. But if you're looking at it from a long-term perspective, let's say for the next 20 years, this might be one of those once-in-a-lifetime opportunities to buy stocks at a Black Friday or Cyber Monday discount. The more assets I own now at a low value will likely pay off exponentially decades into the future. Let me show you my Fat Fire projections, but just the retirement portion of it. I'm going to contribute $22,500 in my employer-sponsored retirement, $6,000 for my that's for my employer match, another $22,500 for my wife's retirement, $6,500 for each of us in the Roth IRA, and $7,750 in the HSA. That's a total of $71,000 in the year 2023 that we're going to contribute. And I'm also going to add an annual inflation increase at 3% and a 10% average annual return for the next 9 years. If I just stop investing at age 45, when I hit my early retirement age, I can let those retirement accounts ride out until I'm 60, and I'll have over $10 million invested. And this is all math, not science fiction. And as far as what I'm doing with my non-retirement or taxable investment accounts, I'm still investing in index funds and individual stocks. This is not any form of financial advice. My goal is to achieve $2 million and have real estate and business supplement our Fat Fire income. We're also going to have at least $1 million invested in our dividend stock portfolio, yielding around 4% annually. If I don't meet my Fat Fire goal of $3.7 million by the time I turn 45, I'm either going to retire early with a lower FIRE number or keep working until I hit the number. The good news is that I have time to achieve that number. I still believe in the growth of the US economy for the long term. I want you to stop wasting time wondering if you can do this. Start doing it today. You need to stop carrying silly debts like carrying balances on your credit cards, taking out personal loans, or getting a car loan for a brand new vehicle that's not even that impressive. I want you to focus on your savings rate because your ROI only means so much if you barely save 5% of your gross income. If you truly want to achieve financial independence, you need to either cut some expenses or increase your income. It is that simple mathematically. But the most important thing is your mindset. Why are you on the financial independence journey? Why do you want to retire early? How are you going to achieve your FIRE number if you pull money out of the stock market because you're being fearful? And if you want to know more about how to retire early tax-free and learn about dividend investing, be sure to check out these 2 videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.